Hello, Cleveland, and everyone from everywhere else. Hopefully, you're feeling great today. I'm feeling a little better, not quite 100%, but we're all feeling a little better today. All right, let's dive in. So, from yesterday, we'll start here on the 90-minute chart as we normally do. We'll start by cleaning it up. Take this divergence, this fib retracement, and is this useful still? Well, you'll see that we did come down basically to the 618 and then found some support there and bounced from there. We've come up over the descending resistance that was, the flag, this bull flag that we were seeing. It was from here. We'll just put that pole back. Put the pole back. But yeah, there's the pole. We moved the pole to the breakout point. We're taking a conservative estimate. It was down from down here. And the measured move was 105. So we did see price action break up out of that flag. And we are now watching as that resistance is now acting as support. So let's see if that can maintain the support and then push up from there. We did not see a higher high, so that's troublesome. That's troublesome for sure that there isn't a higher high there. It would have been great to see the higher high. That would indicate to us that the trend was reversing, but as it stands, the trend is as it was. The bull flag is still there. There's nothing really different. We just had to move the top of the flag. The breakout, same point basically. We're looking at 105. Move to the upside of 105. Here on the 6-hour chart, we got to adjust our little symmetrical triangle. As you recall, this was a little bear flag. Yep, little bear flag, and then within that bear flag was this symmetrical triangle. That symmetrical triangle needs to be just adjusted a smidgen as downs have moved. So we'll put that there. That's still like that. And we'll move the measured move of the bear flag to that breakout point. And we're still looking around 85, 86, 86K. If that move downwards does happen. Now, this move today that broke out from this resistance here, now we're seeing it act as support. That's a good sign that the bulls are gonna maybe have a chance to move up from here. But the indicators here on the 90-minute chart don't necessarily project that. We'll see that the stochastics are pointing downwards, which usually indicates that they're going to continue downwards, and we'll see some further downside. However, we could see them stop here at the 50 and maintain their bullish posture here in bullish territory if they maintain over 50. If that happens and RSI here can maintain over 50, well then we're going to look for another move upwards, hopefully blasting through those areas here, blasting through this resistance, making a higher high, or even a higher high than here. We want to see a breakout over 102.2 to kind of say that the trend is reversing. We have seen that higher low, so now we want to see the higher high, and then another higher low, and so on and so forth. We're watching this. The Stokes here on the 6-hour chart do look healthy and want like they're trying to move more upwards. While the RSI here, it is putting in higher lows, but it's also putting in lower highs, showing that same symmetrical triangle here. We need to see the RSI do the same as price action, putting in those higher highs. So we need to see RSI get back up over 50 and put in some higher highs for the bulls to have a chance. Otherwise, it's more bearish. But that's like over the course of like the next couple of days. Whereas this is more, the 90-minute chart's more looking at what we would see today. Here on the 90-minute chart, as it stands, we're looking more bullish with the price action, but with the indicators, we're looking like there could be some more downside. If there is more downside, the stochastics could get down to oversold territory with price action maintaining a higher low. If it stops basically 96.8, would be a great spot for it to, catch and put in another higher low. That would be good, because then we would be seeing higher highs, higher lows, and that would indicate an upwards trend for today. If, however, we don't see that higher low here, well, then expect further downside. How far down? Well, hopefully this 94 level would catch us, but the measured move of that bear flag, like we was talking about, is down at 86. Now this bull flag here on the daily, still active, still valid, and unless that 94 level is lost, more so than a wick, but like candle bodies coming down, then we'll have to start adjusting it. Now as we start adjusting it, and as price action starts moving closer to that 200 MA, 200 daily moving average, well, then we're gonna have to watch for something like this to happen, where like, hey, it came back to the 200 and then came up. Although you'll see that this has already happened back here in October, and we saw in August, we saw a death cross. That's when the 50 moving average, the orange line, crosses under the 200 moving average, the purple line. And when that happens, that's an indication of further downside. That's a bad signal. Here, it continued to move upwards. Price action came back up over 200 several times, found support, and moved up. But that was a different time. That was still 2024. We were, just past the halving. We're now at a point where this could actually be the top. Back then we were at 60. We weren't in mathematically the price range that would be the top. That's 84K to like 150K. I've shown you that before. It's like a math that I did back in September. And yeah. So anyway, if we're seeing price action start moving under 94, and then maybe even losing some of these other ones, then we're going to have to really start talking about this being the end of the bull run. Because if we do see price action come down to that 200 daily moving average here on the daily chart, and wherever that is, right now it's hanging out here around 78.5, but it can keep moving up. And if price action keeps moving sideways here, in this range, then price action will move up, and eventually there will be some crossings. But I don't think that we'll be able to see another death cross in this cycle and recover from it again. If we see another death cross, that'll be the end of it. But yeah, we're not going to talk about those downward projections until we lose that 94K level. So hey, as long as 94K holds its support, we don't have to talk about the downward movements quite so much. But we do see this bear flag, which shows a possible movement down past there. And if that happens, well, we gotta seriously start talking about what we're looking for to signal the end of the market, the end of the bull market. And well, we just talked about it. It would be a death cross and price action coming down towards this. However, if we keep over 94 and just kind of range here and price action comes back up, we should see this move up by the time the 200 MA gets close enough for a death cross to happen. But if we see a death cross, I think that the majority of people will start selling, and it'll be like a self-actualizing prophecy where everyone will start selling, and that'll just drive the market down, because we'll see something on the charts that'll make everybody sell, and that will end the bull run. But yeah, for now, let's just watch for that 94K to hold. Let's watch for today for price action to get back up over 100 and hopefully even break up over 1025. Even more, hopefully, let's see it break up over 104. All right. Thank you so much for watching. Music provided by Veloa, Luminist, and Sax Squatch. Much love. See you later.